pre-market. Both of them are dip buys with tight stop losses. So I I watched NWGI. It got news on certifications for the platform to be used in the US. The the news was, let's see, yes, it was a GL, GLI 33 certification to launch their elite sportsbook platform in the US of A. So I saw a spike from like 190 all the way to 227. So one so like down here all the way to 227. It was the breakout that I saw. And then I was waiting for it to dip. Potentially the best entry for mine that I'm trying to play is that it has to dip than more than 5 more than 10%. So best best would be over 20% would be potential entries would be 10 to 20%. So if we look at 5 minute chart, it has three red uh, candles in the 5 minutes from 227 all the way down to like 80 area, 190, 180 area. So for sure that is already more than a 10% dip. So I was waiting for my entry on the 1 minute chart. It was coming back down to support area. Support was around 190 based on oh, this is terrible chart. Let's go this to this one right here. 80 chart. Yeah, it was previous resistance right here. It wasn't too good. So I was waiting for it, risking 190. I entered with 40 shares at 194. I, I think my position was way too big for this dip buy because by buying the dip, I don't know how low it can get to. So with that, I had to cut my losses like very quickly if the stock go against me. I don't want it to have a big dip like this one like went from 217 to $2 in 1 minute. I don't want that to happen to me. It could potentially happen if 190 break. It could go from 190 dip really quickly to like 180. So I don't want that to happen to me. That's why I had to get cut my losses like really quickly. So I entered with 40 shares. That was way too big for my account size. It's, since I only have like $100 buying power. Um, it's a cash account, so I had to follow the T2 2-day rules. I already used some yesterday. Now I only have $100 as my buying power. Tomorrow I'll have like $200. So it was kind of like that. So I went with 40 shares, way too big, right by the start. It dipped further. It break 190. So I exit at 189. It came back up and revenge traded. I went with 10 shares, which is right now, which is smaller size. I went with 10 shares at 192 right here. And then there, and I got out at 188. Just for the stock to come back up from 187 back up to 190 and going back up. I What I should have done is waited for confirmations of a bounce. What I did was predicting the bounce, anticipating the bounce instead of reacting to the bounce. Because if I'm predicting the bounce, I don't know when it's gonna bounce. If I let it already happen, the bounce happen, and then I'll just jump in and risking the low for it to go back up. It did bounce from 187 to like 197. So if I actually hold 194, right, all the way to 187 and let it be, and it bounced back to 197, and I exit, made like 3 cents a share, and that that would not be a good risk to reward. When I entered 194, my goal was for it to bounce and break $2 and potentially go back up to 227. But there is resistance to like 212. That is pretty good if it can bounce like that. But I entered as before it bounced instead of reacting, I was predicting, and I entered way too large. That took off like half of that took a like 2/3 of my buying power for the day. So I made like $2 loss here. Yeah, I made like $2 loss here. And then I revenge traded at one with my buy 192 and out at 188. A better buy was right here. This at this candle, or if not this candle, this candle. Wait for the first green candle after the red, enter, and let it grip. A better buy for at that time was right here because it showed that there is supports around here, clear support, and it is a double bottom. If we look at the overall chart, this show right here is a double. Let's see. We look at the overall chart. This right here, it's a double. It's a double bottom. One, two, and it did break $2 to 204 to $2.04. That it's already like hit my goal. If I were to actually have like more buying power, I might have entered right here and get out like on this red candle, or enter right here and get out on like at $2. Might have, because it broke VWAP and then it dipped right away, and now it's like it's showing supports at the 190 area, and right at market open it ripped with one, two, three, four green candles, do 1 minute four green 1 minute green candles. Very very scary though when trading right at the open. Very very scary. This is the volatility. You can see right here the volume was quite big compared to the pre-market sessions. So it went from like 190 all the way to like 220, 220 with resistance up there. So it wasn't able to actually make it to 227. So it made a higher low, not a higher low, a lower high. It made a lower high. So that is that shows a weakness in the on the price actions. So a lot of short sellers will be coming in, and a lot of loan buyers will be getting out because it's show a sign of weakness, and it's a slow market. So for sure it'll dip because lower highs, and even if it goes, it has resistance at 227. So that's like potential double top too. And for sure, all day it has been going down. Went from 227 all the way to the 190 area. And right here, this is the part that I was scared of. I was scared of these kind of dip, these 1 minute dip. Like it went uh, right from 194 all the way to 188, 189. It did come back up, but 190 become the it went from support to resistance, and it's really hard to break resistance now. It's getting lower and lower. As you can see, as it dipped lower, the volume also decreases because people are starting to lose interest in the stock. So no, so that's like less buying power compared to at the open. Compared to at the open, that's less buying power. It went lower and lower and lower. It did consolidate around like the 160 to 170 area all day, but doesn't. It's not a good play anymore because it has such tiny volume. So people lost their interest at around one o'clock to like to the closing. It's not even coming back up. And then look at aftermarket, barely any trade. So for sure it could dip further. It could maybe gap up, but with how the market is going, it has like higher probability of dipping. It unless it has like a very good press release tomorrow. Probably gonna talk about the certification again, but still, it's already down for like the highs at 227 in day trading. Yeah, you just take the actions, not take the actions, but use the price actions as your vehicles for profits. And since there's barely any volumes, people are losing interest. No there's no sense to actually trade it anymore. So yeah, my mistakes was predicting instead of reacting. I was predicting a bounce instead of reacting because if I was predicting a bounce, I don't know how low it can get to. It could go from 190 all the way to 180. Could go even lower during pre-market sessions, even though it has dropped more than 10%. It could drop like 20%, 30%, 40% because it's already spiked up like 50%, and then it dropped down to like 20-30% from the previous close. So yeah, it made like a double bottom right here, and then it consolidated at the 190 area just to spike all the way up to make a lower high, and then it dipped all day. So my overall loss for today was $2.40. Not terrible trades. At least I cut my losses very very quickly to have like less than 3% losses. So over my average percent loss was like around two. Let's see, it was between 2 to 3%. Yeah, that was my average loss for today. Percent loss. So yeah, another day of loss, and that would be all.